Thank you so much. So now I saw the Excel that you had shared. Um, so
Is it fine,
yeah.
or do you want to fine tune the same?
Um, so first of all, right, production order variances, and then get into anything that you have listed. I think that will cover everything, right? So I gave you a
Yeah.
background of what I'm looking for. Um, I have been hands off the system for about 8 months now since we went live with this project. But um, if I can brush up my costing and get to all of understanding production order variances and production order settlement process, then getting into actual costing and ML and whatever you have listed here, right? That would cover everything for me.
Good, good. So as we go further, we can refine this add or delete topics as you want. So first three are fine, right? First three sessions.
Mm, do we want to start with production order, or I'll let you decide? You are the expert. I'm
Okay.
only learning from you, so I'll let you decide to help
Okay,
me
got it.
understand everything. But I will just
Mm.
make notes as we continue to talk here.
Okay, so should I give you my brief background?
Yes, please, of course.
Yeah. So I am also CA 92 batch. So I did CA 92 batch and then worked for auditing firms like PwC and
Mm,
ENY. But auditing, so even in auditing, I used to go towards CO, costing, cost audits. So my FI didn't, for me, FI was, or you can say accounting or auditing line. I
mm,
was more into creative, so got into SAP CO, learned in 98. 6 months I learned in 98.
mm,
It was through Systems America, based in Noida. So took training there, then gave training to people. That was 98 to 2000. Then I went for first project, Japan. So I did first implementation in Japan in production. That is National Panasonic, or called Masushita. So 1 year there. Then came back, joined HCL Technologies. So took certification. Then learned BW. Did
mm,
some projects there. Then 5 years I worked with IBM. So that was a good stint. So implemented in Gas Authority of India Limited as CO lead. I was sent to Melbourne for 18 months. So did for Philip Morris. I did end-to-end implementation for Philip Morris. Again, product costing and material ledger. Then
mm,
rollouts. Then came back to India, did blueprinting for Unilever, and then project management, managing support project. Then 10 years, sorry, then I went to Whirlpool for 4 years. It's US-based company, headquarters
mhm,
there. So I was the SAP project manager, and most into BPS, zero-based budgeting implementation, and different projects in product costing and BW.
mm, mm,
Then 10 years I worked with DuPont, again US-based chemical company.
mhm,
And within 10 years, I also did a spin-off to chemical division, Chemers. So I was the global material ledger lead for all the regions, doing month-end closing, solving the issues, and also small projects whenever they come up, like inventory cutover on DuPont to
mm,
cutover. It was $6 billion inventory. So I was a lead there.
mm,
Then after that, I did learned HANA from 2021 onwards and joined PwC. So 4 years HANA experience. PwC worked for 18 months. Then Deloitte did for implementation for Exxon Mobil
mm,
project. And then recently with ENY did a Daikin project.
mm,
So my most experience has been into product costing,
mm,
material ledger, transfer pricing using Profit Center, and planning. Project system I have been trained, but not work in depth into project system. So one
mm.
of your So yeah, but I can try to resolve whatever I can. But basic concepts I know for actual costing, material ledger, and work in depth in both.
I think the problem is more, um, I don't know it's a problem, right? We have an issue, but it's more the lack of understanding of material ledger and
Got
why
it.
it behaves in a certain way, right? Why it posts price differences. Where is it, how is it determining that price difference amount? When it runs a project settlement, how does it determine what to post as a, cost versus what it posts as a revenue adjustment? Those are the kinds of things that we are struggling with, right?
Got it.
And I have tried to analyze material ledger, but every time it's something different, it just blows my mind off. So I really want to not work on just solutioning a problem. I rather want to understand the concept. So then it helps me with the problems. Every time the problem could be different. If the conceptual understanding is there, then
You
may
can
or may not
resolve.
help,
Yeah.
or it will come with experience, I think maybe. But this has
Got
been
it.
just bothering me for the last 8 months. So I've been trying to find so much help on this topic, and glad I came across your profile on LinkedIn and we connected, and here we are today.
Right. Thanks.
To me, you are God sent to help me solve my problem. So
No worries. So as I understood, you want basic concepts, in-depth knowledge in material ledger, actual costing, and you can ask. So I prepared this presentation and
mhm.
45 today it may take more time, 1.5 hours.
Okay,
So I'll explain. Then you can keep on asking questions and uh, let's take it forward.
sure.
Yeah.
So you teach a person who doesn't know anything about product costing.
Okay. I'll keep that in context.
Yeah, because otherwise, if you think I know something, I could really screw it up in that place too. So just teach like you're teaching anybody who doesn't know product costing. That will help.
Okay. Okay. So in future sessions, today I have not put per costing. I put only actual costing and material ledger. So you
Hmm.
want me to add per costing also in future sessions and adjust this schedule because
Yeah,
looks
we can
like
focus on actual costing material ledger for now. And
yeah,
then future sessions, yes, as in-depth as I can learn product costing, learning is going to help me some way or the other. So,
got it. Okay. So let's start with today's session.
okay.
Slides are visible.
Yes, it is.
So today I'll do give an introduction to costing, overall costing in SAP.
Mhm.
Then I'll compare standard costings versus actual costing and why business needs actual costing. Then some core terms, basic terms in actual costing before we go in depth, and how the actual process happens in actual costing.
Mm.
And you can ask, if I'm going fast, you can ask basic questions and I'll answer. Or in the end also, we'll cover.
Sure.
So, what is spread costing? Why do we need costing in SAP? What are different costing methods in SAP? That's the first slides.
Mhm.
So, what is spread costing? The main purpose is to calculate the finished goods and semi-finished goods standard price and actual price. So there are two modules. Product costing calculates the standard price and actual costing calculates the actual price. So the main purpose is to calculate the cost to manufacture a product. That is the main purpose.
Mm.
And why we need product costing? So once we know what each finished goods, what is the price to manufacture, then they can determine the selling price of the product. To perform COPA or margin analysis, product wise, customer wise profitability also possible. So the product costing is a base for that. Budgeting and cost control. Also, the product costing is the base for that. And the mainly is for balance sheet, valuation of inventory and COGS. So this is a big item in balance sheet. And for audit purpose also, valuation of inventory and COGS depending on the accounting policies. So these are the big benefits of product costing. We have two methods for product costing, raw material, sorry, semi-finished good and finished goods. One is standard costing, other is actual costing. This is 99%, 100% wherever you want to do. This is the first step, standard costing, to calculate the standard price in the metal master. That's called standard costing. It's based on plan. Normally it is done once a year, or some companies do quarterly. Like wherever I worked, so standard costing has been there except in DuPont. They used to release actual cost every month, that used to become standard cost, but Whirlpool, they used to do standard costing and actual costing is statistical. And then Exxon Mobil, we saw the same thing. They will do standard costing actual, but standard costing every year, update the standard price every year with the planned data, but actual costing statistical. They will run, but they will not update the standard price of the material master.
That's what we are also doing here.
Okay. So you're doing standard costing yearly?
So rest of everything other than this particular business unit, everybody is standard costing,
Right.
and we run it annually. This
Right.
one business unit is actual costing, but we don't, when we run the CKMLCP, we don't mark and
Mark
release
Andrew.
that cost at the end of the month. It
Got
goes
it.
back to reversing that entry on the first of the month and going back to
Yeah.
standard cost.
90% people do that. So they just do it statistical purpose so they can compare the reporting, just for reporting purpose. In DuPont,
Okay.
what there were legal requirements like Mexico, it is mandatory, some countries. So this and
To mark and release?
mark and release.
Okay. Okay.
So legal requirement, and if the prices are fluctuating regularly,
Mm.
only on those cases. But 90% which I've seen in different projects, it's same like your process, yearly standard costing and just statistical actual CKMLCP without mark release. So
Okay.
in within actual costing, you have inventory revaluation and consumption revaluation. Both are activated. So two options.
I I think so. That is when I'll try. I see revaluation of consumption happening. Yes, and inventory revaluation also happens. Yes.
Right. So these are the two options. You can either choose both. Normally we choose both, or sometimes only inventory.
Mm.
Yeah. So there's a tick in CKMLCP when we run
Mhm.
revaluate inventory, revaluate consumption.
Yeah, I think we do both.
Right. So when we tick revaluate inventory, what it does is in month end, so there'll be a difference between standard price and there'll be a lot of variances like purchase price variances, production variances, etc.
Mhm.
Those variances, they revaluate inventory. They go and hit the inventory account. Inventory which is in stock as on that month end. If it is sold, so that COGS is revaluated if the same finished good or semi-finished good inventory is sold, then for that percentage it will go to consumption. it will hit the COGS account, revalued COGS.
Okay.
Go forward. What is the difference
Yeah.
between standard costing and actual costing? Standard costing is we used fixed price or standard price for each material for whole year so that we can compare standard versus actual. Normally it's a budget, like in Daikin, this is a budget is created first, then standard cost is calculated, then marked and released. So when we activate actual costing material ledger, so SAP recommends even the raw material should be at standard price.
Mm.
So raw material, semi-finished good, finished goods, all should be at standard price. Consumables may be at variable price.
Okay.
So it's a fixed price for the whole year and it is marked and released, and that remains. Any goods movement from then onwards will be at standard price. All the goods movement use this standard price for the whole year. Unless it is next year, it is again standard costing run is done. So what happens in standard costing is variances are posted to separate accounts. Price variance accounts are configured in OBYC.
Mhm.
So as you explained that it's hitting one GL, we can see your configuration. Like we had a requirement in my old project that we wanted to see variances separately. It was configured wrongly earlier. They wanted to see variances separately to raw material, semi-finished good, finished good. It depends what is your requirement.
Mm.
Sometimes consultant they go and put just one GL for all the three. So we can see your OBYC and how you want to change.
Mm.
So this is simple example. You have an annual standard cost for material $10. Actual procurement cost is $2. This $2 is posted to a price difference account, and CKMLCP picks up all the price difference and valuates either inventory which is in hand or COGS which is sold. And same way the
Mhm.
variances happened for your settlements. Same way for exchange rate differences and same way for activity prices. You also have activity price activities there also in your organization.
Yeah, we do. You mean like where we are maintaining setup, labor, machine?
Right, right.
Yeah, we do. We do.
So normally we have three type of variances, four type of variances. High level, it goes. This is simple example: procurement variance, then will be production variance, and activity variance, and then exchange rate variances.
Okay.
Advantage of standard costing: mostly all the implement. This is basics for standard costing. Basics for any product costing. It easy to plan, analyze, and easy to compare standard versus actual. But there are some limitation of standard costing when prices fluctuate a lot.
Mm.
Then we need to like and so in DuPont we used to do actual costing, also mark and release. Instead of standard costing, used to do actual costing every month and every month release. That was their inventory policy. Standard costing does not support multi-level roll-up. What is I mean by multi-level roll-up? There are bombs. So in bombs, we have raw materials, semi-finished good, finished good, and we roll up the variances. In only in actual costing is possible from raw material to semi-finished good to finished good. But in standard costing, this is not possible. And third limitation and advantage of actual costing is even COGS is reevaluated at actual cost every month. So you can compare revenue versus COGS and see the actual profit, not the notional. So standard is, so COGS at standard will be 1 year old or quite old, not 100% as per the current data. So COGS is reevaluated. So it enables the COPA or profitability reports for salespeople.
Okay.
So to summarize, both standard costing and actual costing are implemented normally. And now in HANA, so I should cover on HANA also or on just stick to ECC?
Yeah, you can cover HANA also. That is a good learning too.
Okay. In HANA now, material ledger is mandatory. ECC it's optional, like you told, or your other SBUs they're not activated material ledger.
Mm-hmm.
But HANA we have concept called AC Docker,
Mm-hmm.
and AC Docker means universal journal. Now we don't need, so AC Docker or universal journal, it means at conceptual level, we don't need to reconcile FI versus CO
Mm.
because material is also there in universal journal. Profitability segments are also there in profit universal journal. Secondary cost elements, you may have heard, it is also
Mm-hmm.
created as a GL, not secondary cost element. So they are not created in CO, they are created in FI. That means FI and CO, FI and ML, FI and the COPA reports will always reconcile with FI.
Mm.
So that's a benefit. Because the AC DOCA has material and SAP has made material ledger mandatory for all organizations in HANA.
Okay.
Basic due to AC Docker table, and this is not there in this concept is not there in ECC, so it's still optional
Mm.
in ECC environment. So I'll cover in detail what, so but there is a difference between material ledger and actual costing. Material ledger is mandatory, actual costing is still optional.
Mm.
In today's session, we'll cover both. What's the difference between both? Okay, this slide is come. So when we activate material ledger in ECC and wherever SBU you have implemented, that means you'll get three currencies you can have.
Mm.
If you don't have activate material ledger, you can't have multiple currencies. In the material master, if you see your material master, you will see three currencies in accounting one view.
Mm-hmm.
So maximum three currencies have. In addition, you can have three parallel valuations. Like legal valuation is for the company code, group will be for the controlling area, and profit center. If you so as last project in Deloitte, we implemented transfer pricing for profit center. So in
Mm.
Middle Master, you can have three views, or you can evaluate inventory in three views: legal views, group view, profit center view. Only in material once you activate material ledger. And material ledger, once activated, it becomes the base for actual costing, which is still optional.
Okay. So you cannot do actual costing without material ledger being activated.
Yeah, so that is basic. Yeah, material ledger has to
Okay.
be activated. That is the first step. So first we need to activate material ledger, and then there is a configuration to activate actual costing later.
Okay.
It will not allow if we this not done.
Okay.
So current project, which I'm current project. So so I'm doing for one plant is already activated. 1 year back.
Mm,
So doing for another plant. So what the previous, it was different implementation by different team, Big Four. They didn't
mm,
activate actual costing. They activated for one plant, but they didn't activate for warehouse plants. Now the huge
mm,
problem has come
mm.
because to activate running plant for 1 year, material ledger is active, but actual costing is not active. So this it will take 4 to 5 days for one plant because we need to. It's quite complex. All the
Because you're
history,
going to go back and turn on for history, like purchase orders, production
yeah,
orders, everything, right?
yes, yes.
Mm,
All the 1 year old history, and many errors may come up.
mm, mm,
So there are 130 plants, so there'll be a separate project for that, for warehouse
mm,
plants to activate. This is the biggest learning. We need to activate actual costing from start.
mm.
After it is gone live, it becomes very difficult to activate later. So this is high level material ledger usage. So do you also have this parallel valuation or currencies in material
No,
mass?
we only have this particular business unit. They are in Canada,
Right.
so they have Canadian dollars and USD, but we don't do um any PIN, which is profit inventory valuation. We don't do that, or transfer
Okay.
pricing. None of that is really valid in this scenario.
So two, legal valuation and group currency.
Yeah,
Legal
yeah,
currency. So Canadian will be legal and group will be USD. Yeah. So two are
correct,
activated. Yeah.
correct. Yeah.
Right. So any questions on this? This was basics of material ledger.
No, so far I'm good.
Okay, we'll move forward. What are benefits when we activate material ledger? We can calculate this becomes base period PUP, or you can say actual price every month. In your case, it's statistical. We don't mark and release,
Mm,
but because of material ledger activation, we can do calculate PUP. There's something concept called, so one is material ledger, one is actual costing, the third is separate configuration for actual price component split. We have cost component structure at standard in standard
mm,
costing. When we
mm,
implement standard costing, we can, there's option to activate actual cost component split. Means the breakup of standard cost into material, labor, overhead. When we do just standard costing, it will just show the standard split. But when we activate this, you can see actual split also and compare standard versus actual split. By what I mean by cost component split is breakup of that standard cost into material, labor, overhead, machine hours, etc. If you want to see actuals in different components, this is additional functionality.
mm, mm,
So you can see actual cost of inventory, which you book during the month end and reverse next working day. And you can get actual COGS in COPA. So COPA is also there in your system.
Um, we do have COPA, but we don't use it extensively.
Right, right.
Mm,
So the benefits, the COGS also, COPA has just revenue and expenses. So the COGS posting, which you do every month. So actual COGS we can see in COPA for reporting.
okay,
So
okay.
these are benefits of material ledger. Now we'll go into basics of what is actual costing. We have covered standard cost. So actual
Mm,
costing captures actual prices for the month. So
mm,
when we run CKML CP, We include all the plants and all the materials, mainly raw materials, semi-finished good, finished good. It evaluates all the three materials in actual. And revaluation happens in two steps. Only inventory at the month end is revaluated, and if an inventory is sold during the month, that COGS is revaluated. So this is a ratio of how the actual prices are done. Always inventory month end and COGS, inventory sold during the month. And COGS is never reversed because the PL and item inventory is reversed next working day.
Mm.
So more accurate profitability and more accurate inventory valuation. So that's the purpose.
Okay.
Now let's compare, but we already covered, but let's compare both standard costing and actual costing. So in standard costing, what are the basic elements required? First is the master data quantity structure comes from PP and MM module, mostly PP.
Mm.
So to manufacture a finished good or semi-finished good, there will be a BOM. BOM is nothing but all the materials required to manufacture a finished good. The lower levels are raw material, then it could be semi-finished good is first prepared, manufactured using raw material, and that semi-finished good could be used in that finished good. So this is an example of a BOM. BOM is nothing but all the materials required to manufacture semi-finished good or finished good. That comes from PP model. They create BOMs. And for each material, we have standard price in the metal master. So that quantity, they also mention how much quantity is required for each material to prepare finished good. Quantity comes from BOM, PP, and the rate comes from activity price is you entered KP26. Sorry, standard price in Middle Master. So activity I'll come later.
Mm.
So in Middle Master we have standard price and quantity in BOM. If we multiply that, then we get the raw material cost. And routing is nothing but how the sequence of manufacturing will happen. Operation 1, 2, 3. This also is maintained in PP. And routing within routing. So BOM is which all material I need to manufacture a product. Routing is how I manufacture a product, how many operations I do, how many production lines are there. And each production line we have work center. And in work center, we assign cost center and activity type. So there KP26 rates are there. Labor, machine hours, etc. Setup. So standard value entered in this routing and within work center, cost center, active type. There is one screen where we attach work center to a cost center and active type. Quantity comes from this routing master data. Rate comes from KP26. That's how we get the overhead rates. So this is how standard cost is calculated, raw material, overhead, and also for uh, cost center, we can do planning and calculate the activity price either manually or through automation, KP26. Then we calculate standard cost estimate yearly. So value from controlling model, quantity from PP. So we get cost component split, but nothing but breakup of standard price. For example, in this example, standard price breakup is material, process cost, labor cost, overhead cost. These are components like 10, 20, 30, 40 are configured. So breakup of standard price is called cost component split. Into these are the
Okay.
component names. So this is standard costing done every year, and it is marked and released in Metal Master every year. All the goods movement happen to the production orders or to project system at standard price. All the goods movement to project system or production order. For example, raw material is issued. So it always happens at standard price in the Metal Master. And then every month, so this is a yearly, you can say quantity structure. Quantity structure means bomb routing.
Hmm.
So this is a standard quantity structure, but when you do month end, there could be a difference, like actual raw material consumed may be different than what was planned. So that becomes actual quantity structure, or the operations number of hours done as per standard may be different. Actual confirmation is different. So there we get the actual quantity structure versus this is planned quantity structure. And that is multiplied to get the and the price differences. So four price differences: purchase price differences, production, exchange rate, and activity type price differences. They are posted to material. And then we calculate actual cost. Technically, it is named as periodic unit price or PUP. In CKM3, we see it as PUP.
Hmm.
And when we activate this separate configuration, actual cost component split, the same breakup of standard price is now you can visible with actual price. This will be different.
What did you say was this actual quantity structure?
For example, in a bomb, you mentioned this many raw material will be used or semi-finished good will be used as a plant for the whole year to
Hmm.
manufacture a finished good. But actually in shop floor, you consume more or less. That is
Hmm.
actual quantity structure.
Hmm. Hmm.
Maybe you planned for 100 raw material, but you used 120. So standard quantity structure was 100, but actual quantity structure is 120. A simple example. Or routing also has standard values. 10 labor hours are required to manufacture a product, but you may have done 12 hours. Actual. That happens, this is called activity confirmation at shop floor.
Correct. So, um, so that is common irrespective whether it is standard cost or actual cost, right? That's how we calculate variances, right?
Right.
So, how is it different between standard cost and actual cost when we say actual quantity structure, or is it only coming from a price determination standpoint that those two are different?
So this standard, this is yearly quantity structure, just a planned one. But actually in shop floor, it will be totally different. So this is a planned bomb and planned operations, how many hours of labors, how much raw material will be consumed. This is a rough data based on historical. But actual when we start production, it will be always be different than the actual, for example, raw material which were actually consumed. There could be some breakage, some scrap, etc. What are the actual raw material issued to the production order? That is called actual quantity structure. Hope it's clear. You can ask more if you want.
No, only thing where I'm struggling to understand is even in standard costing,
Right.
Standard costing will be actual quantity at standard prices, whereas here it will be at actual prices. Is that the difference?
Yeah. So this
Okay,
even standard costing,
right.
you are right. This in production order we will have the standard cost and actual cost. But this is price. This is CKMLCP. So
Mm-hmm.
this may be confusing. Yeah, is this will be same for standard costing and actual cost. But only the
Okay, that
rate
is
will be
going to be
different.
same. Rate will be different.
Rate
Price
will,
will be different. Okay.
raw material price will be different. Equity price will be different. We're going to reevaluate equity price every month end.
Even in actual costing, till we run CKMLCP, which is the last step, right?
Right.
Every step that we perform with the actual costing is just standard, is what we do even with standard costing. Nothing is different there,
Right.
except the month-end process that reevaluates everything at actual cost.
Right.
Okay. Okay.
So how the whole process happens is first one box is missing here. I'll add. I'll explain that box. So during the only in the start of the year we calculate the standard cost, and every month. So for example, there's a production order. In between there's production order. Every month raw materials are issued to production order. Activities are confirmed. These are actual quantity, but standard price to production order. Cost center allocation happens. So during the month, so before this production, the cost is getting booked to production order and FI cost is booked to cost centers. Month end first we close all the cost center balance to be zero. It should go to all production cost centers.
Hmm.
So we do cost center assessment distribution so that all the cost is booked. Nothing is left for accurate actual costing.
Hmm.
So we ensured cost center balance is zero. Then we close the production orders. We ensure that either WIP is done. So we have three steps for closing production order. First, we ensure all the bookings are done. Any COGI errors to production order are resolved. No errors in the system. No balance entry required before we start month end. Then we calculate any WIP is there. Then we calculate any variances are there. So variance calculation step is there. Then we settle. When cost center balance is zero and production order balance is zero, only then we start this LCP, the third one.
Hmm.
So there is a sequence of month end closing.
Okay.
So why we need actual costing for correct inventory evaluation instead of standard at actual cost, especially if raw material prices are changing to get accurate COGS and have to roll up the price difference across raw material to semi-finished good to finished good, multi-level production.
Hmm.
The four advantages of actual costing. So some of my experience in Whirlpool. So Whirlpool was standard cost, statistical actual costing. DuPont was actual costing, CKMLCP every month. And every month there was a market release to standard price was changed every month. ExxonMobil again only DuPont and Chemours are same. So ExxonMobil same like Whirlpool, yearly standard cost and no market release. Daikin also we seen. They
So
only
in the case of actual costing, right?
Right.
If we say it's actual costing versus statistical actual costing, where we don't mark and release at the end of the month, but we reevaluate inventory and reevaluate consumption and all those things, right?
Right.
The process, right? Month end process itself, we run a day after the month is closed, right? So, say September 30th, we start doing our month end closing only on October 1st.
Right.
That is when we will run CKMLCP and everything.
Normally, I don't know your month-end calendar. First happens is first FI people close sequence like
Correct.
depreciation, salary posting. Once they
Yes.
finish, then the cost center team will start working on allocation, depending
Mm,
on I don't depending on the volumes. So they'll do
mm,
cost center allocation, distribution, etc. So that cost is booked from cost center or internal orders to production
mm.
order. Then
Correct. But the question
production.
here, right, we follow all those, right? So we have our day 0 to day 4, day 5 of month end close. My question here is CKMLCP, which is material ledger closing, we don't run it on September 30th itself. We wait for all these other, uh, let's say, predecessors to be completed, because all your material related movements and transactions have to be completed so that you can execute CKMLCP for the prior month, right?
Right, right. Yes.
But when you say you mark and release actual costing, that say it is by day 4 is when you run CKMLCP. So October 4th is when I'm actually running CKMLCP for September. When I mark and release, 4 days of transactions have already happened in October,
So
but
system
all
does not
those
will not allow
production
to
transactions.
mark and release on October. For example, you're giving example 30th September for month of September you're doing closing and in CKMLCP you're running on 4th October. It will do mark or first what will happen is when you do mark, there are two separate steps. It will do on 1st November date, future price. And only on 1st November it will standard price will be released. Same month because you're so right because of 4 days gap, SAP will not allow because there will be inconsistency. 4 days you have different standard price, and those next 26 days you have separate standard price.
Correct. In the case of actual costing, right? If you don't do statistical actual costing and you follow actual costing, which means the
1 month
last step
gap.
in your CK, there is 1 month lag, right?
Always, yeah. System will not allow
It is
done.
never actual costing for the next month, because
Always
my problem was September 30th, my books are closed for September. I don't have the PUP calculated on that day. October 1st, I'm not stopping my production operations or transactions from flowing into for
last month.
October, correct?
Yeah,
But I still have only the standard price from the last month. It's not updated to actual price. So there is a
yeah.
lag in the actual costing. Even
Always.
if I chose to go with the marking and releasing, there is a lag.
Yes.
Okay.
That is, I've seen all my implementation. There's a almost normally CKMLCPs in the last day, normally fifth working day, fourth or fifth, depending on
Right,
organization. There's always a
right.
lag. Same
Yeah.
day,
See,
only if that is so there was a requirement Exxon Mobil in the top management
mm,
is only
mm,
possible if you can close all FI you can close half day, first half day. Cost
mm,
centers you can close
mm,
only then on then production order you can close and then run midnight maybe CKMLCP. Only on workday one you can have if your processes are so efficient so that you can close others also.
mhm, mhm.
And I've
Yeah, so there's, yeah.
never seen any organization in my last 10 projects always like 4 days. Yeah, you're right. Because of this uh, month end closing sequence.
Mm, mm. But then this brings me back to one question that I've always had, right? We say we are doing actual costing, but we're doing actual cost, statistical actual costing, right? In the sense that we are describing, since we don't mark and release, it is only calculating the periodic unit price, and we are doing statistical actual costing. In
But
that
FI
case,
posting in middle master it's statistical because it never gets marked and released. But FI postings are real. Inventory is
but
reevaluated, COGS are reevaluated at FI level,
inventory is reevaluated at FI level for the month end. But
month end
the first day of the next month, it reverses it back,
versus.
right?
Yeah, yeah, right.
So what is the actual um, where I struggle to understand is what is the purpose of actual costing when we say inventory is getting reevaluated, then again it brings it back to the standard price, right?
For example, you're doing balance sheet for quarter end. For the quarter end, you will find at inventory at actual cost. Next working day, it will reverse. But for that quarter end, when you're publishing reports, balance sheets, so that inventory will be at actual cost.
So it is only for a
Month end, always
it's
month end.
only for a time frame. It's only for
Time,
some yeah, it's only for that one day in the month end inventory balances are at actual prices.
right.
Ah,
For
okay.
reporting purpose.
For
Because
reporting purposes. Hmm.
inventory is mainly the big item in balance sheet and normally reporting purpose.
Hmm.
Otherwise, if you don't do, then it will be at standard price. If you don't do actual costing in balance sheet, inventory will reflect at standard price.
Hmm.
All the reporting periods, quarterly, yearly. You are right, it is confusing, but
Hmm.
this is what is. But in middle master, you will not see at that's why it's called statistical. You will see separate price. Standard price will be different. POP will be different.
And the other question that had is if we are not marking and releasing PUP to be your standard cost, how different is this from moving average price? Why
POP
couldn't we
itself
have
is a
used
yeah,
moving
yeah,
average price? And why do we have to do material ledger with actual costing?
yeah, very good question. So middle master in moving average price, each movement will change the price. But here only month end it's change the price. That's the big difference. So for example, for raw, some companies put V for the raw material if actual costing is not there. Each goods movement to that raw material. For example, in a day it could change multiple times or daily if there are goods movement. So for each goods movement, moving average price will be new one. But POP it is also moving average, but for the month. That's the main difference. Hope I'm clear.
So, so PUP is moving average, but it reevaluates inventory only at month end.
Month
But
end.
in moving, if we go with moving average, it does it on a regular basis,
Yeah.
on a daily basis.
So no variance. So variances it will do very. And if the requirement is okay, this is one technically. If the for moving average, the price control is V. So if in metal in when you do CKML CPNA, it will ignore all the materials which has this price control V or moving average. It will always do only for standard, which Metal
It will
Master has
ignore
standard
anything with the price control V.
V. Only S it will take. And also this technically when we go forward, there's something called price determination in Metal Master 2 or 3. It will only pick 3 Metal
Okay.
Master. So two things it picks from Metal Master. S price control and price determination 3. It will ignore 2 and V.
Okay. Mm. Okay.
So we'll move forward.
Mhm.
some of the terms we already discussed, so we'll discuss some basic terms which we use in actual costing. We have just now covered. So yeah, POP we already covered. It's a statistical price and it's a monthly moving average price, which is always calculated month end. This is one term, POP. The other term is middle master. We has price control. Either we can put S or V in middle master. For all actual costing, when we implement actual costing, raw material, semi-finished good, finished good, all are recommended to be at S. And in CKMLCP, it picks up only S.
Okay.
All metal which has S, it ignores. These are used mainly for like spare parts, moving average, which are not part of production. Those materials, consumables, spare parts, etc. MROs,
Mm-hmm. So
assembly
those are
product.
excluded, you said, MROs and
Yeah, they are
consumables.
never taken in actual costing. They are not part of production.
Mm-hmm. Okay.
Then yeah, so price control is S for all goods movement during the month. Then system what it does, it change during the month end to V, the price control if you see, and then it will calculate the periodic unit price, average price for the month.
Why does it change it to V?
To calculate the moving average price for the whole month. So technical setting. In background this system, SAP does it.
That its system automatically does it irrespective of
Yeah,
whether we want it. That's not a feature that we can turn off.
no. Whenever we do CKML CP, this is a technical feature. Only when period closing, only that time.
So after the CKMLCP is run, it changes from price control S to price control V
Yeah, for the previous period. But next
for
month
the
it will be
previous
stand. But
standard.
during the
Okay.
month it will be S only. All goods movement will happen in S. It will lock the previous month to
Mm-hmm.
calculate the price for the previous month. But next period it will always be at S.
Okay.
So these are some terms. Then so now I'll cover some high level process.
Mhm.
So how many slides? So 5 slides. Should we continue?
I can continue.
Okay.
If you can, yeah, we can keep going.
Yeah, we can continue. So how little more detail during the period what happens before actual costing is done.
Mm.
So goods movement happened at standard price to production order during the month. So you can say when we activate material ledger, it becomes a sub ledger. Like accounts payable, account receivable have a sub ledger. You can say for inventory, this is a sub ledger, material ledger, just like APAR. And in CKM3, what it does it for each material, it captures the goods movement. If any purchase is done, invoice is done, any variances also it posts. It then
Mm.
production order settlements happens.
Mm.
If you're doing MR22, any debit credit to the material during the whole month, it captures material wise, and then we calculate the actual price. So
Okay.
then the prices are frozen, then it changed to V. In addition,
Mm.
all the goods issued to production order. So this goods issue will be at actual quantity structure, activities, good receipt, metal transfers. These both boxes, it is storing first for the whole month. In month end, then it calculates price for each material.
Mm.
And since it's a material ledger, there is no user action required. So all the material ledger updates to material master are done automatically, like good receipt, invoices, goods issue, production order, stock transfer, settlements. Everything you can see in CKM3 screen, even during the month. Any goods movement entry, you can go to CKM3 T code, CKM3. You can see in
Mm.
Metal Master for each material plant combination as and when it happens. So this is automatic when we activate material ledger.
But nothing is actually different in CKM3 and everything is still material ledger or CKM3N is actually capturing all the transactions, right? All the goods movements, everything that's happening, it's basically capturing it, but it is no different than standard, right?
Yeah, it always happens in standard price. Yes. But if you don't activate material ledger, this functionality CKM3N is not there.
Hmm. Hmm.
For analysis purpose during the month, before we start month end, we can see the
Hmm.
variances before starting and any huge variances because what we see material ledger is you can say dumping ground or not the exact word. All like metal, all MMPP SD transaction all come and sit in material ledger.
Hmm.
And all errors we can see in all, if any error comes, it will come to see in CKM3 material ledger.
Hmm.
That's why it's very complex. We need to learn basics of we need to learn basics of MM, PP, SD, etc. Their purchase orders, sorry, production orders.
Hmm.
For example, somebody has made a huge mistake. Instead of 1,000, they put 1 lakh. It'll come and
Hmm.
hit CKM3. You can know immediately.
Hmm.
So it's an analysis ground also.
It
So
is an analysis ground, but what happens is, right, if you have multi-level, meaning raw materials, SFG and FG,
right.
at FG level, you're able to narrow it down to which material is having that problem, which lower level component or material has that problem.
Yeah, if you see, if you open CKM3, CKM3 and for finished good, and
Hmm.
you want to see during the month, there'll be production orders, what all raw material has been issued. You can go and see the production order and see raw material from there. So drill
Yeah.
down functionality is there. It's very good in CKM3. You can see all
Correct.
the transactions from there. Purchase order, production order, goods movement,
Hmm.
everything from CKM3. Just double click. It will show all the purchase orders for that material and drill down functionality.
Where we struggle is mostly, right, where I said some of our PIRs are incorrect, right?
Oh, okay. Okay.
As a result of which our standard cost is incorrect. We figure that out in the middle of the month. We go back and fix the PIR, but we are not able to recost it till the next month, right? Anyway. And when we recost it the next month, ML does something that I struggle with as to what it is doing. What, why did it, not post it? And what is the price difference it is actually posting? Where did it calculate that price difference from? Some of those price differences that it calculates, I have struggled to even get to that calculation. Maybe that's That's why understanding that CKM3 and screen is, I think, very critical for ML, right?
Very critical. Yes. One reason could be there will be a, for example, variance is there. There is a production order 1 month, but
Mm.
stock is not there. It posts to the next month, but there is no production order next month. It will go to non-distributed.
Mm.
It's
Mm.
very complex.
Mm. I have seen not distributed, not allocated.
Right.
I have tried to use CKM, VFM, but
Value
again,
for went.
yeah, value flow monitor. But because maybe um, the lack of understanding of what ML is doing, I struggle, I think.
So your root cause is purchase info record are entered. So that root cause you can try to fix. It doesn't next time it doesn't happen. Why wrong purchase info record are there?
We do fix that. Um, but this is just ML and actual costing.
Okay.
In our scenario, where it gets a little bit complicated is when project systems comes into the play.
Right.
The total cost of the project, right, where they do the POC calculation based on cost based POC, your planned cost versus actual cost comparison. Where we struggle is we don't know because of this price difference, how is ML going to react and post a price difference? That price difference gets impacts the cost of the project, actual cost of the project, right?
Right.
So that is where it increases the cost, or sometimes it brings the value so low. So
Right.
yeah, so understanding how ML is actually calculating those differences, yeah, now that I start listening to you, I think it's more very critical to understand how ML is functioning,
Right.
especially that CKM3 scheme.
Yes.
So sorry, I'm talking a lot.
No, no, you're right because you have practical challenges. So what we used
I
to
have,
do
yeah.
is
Hmm.
in so our team what used to do they should start CKMLCP workday -7 onwards. Because there are steps you can do post closing they do only in month end workday 4 that is F5
Hmm.
posting. But you
Hmm.
can see the this price variances in CKN3 screen. So you can run even before that. Even when you say workday minus also. So all the incorrect entries will always come to ML. It will be caught there itself before working, before starting on workday 4.
Hmm.
So person was trained to run this CKMLCP, workday -7, 6, 5. If any wrong entries are coming, analyze reports, etc. To
Hmm.
catch it before we run CKMLCP.
Okay.
So HANA, so this concept called single level difference and multi-level difference. In HANA, it is same, but in ECC, you still have. In CKMLCP steps, there will be two single level difference and multi-level price differences. Two. So what is the difference? Single level means uh, within, for example, for a finished good
Hmm.
or one single material production variances, or one single material price differences. Single level. It will be more clear in multi-level. Multi-level is bomb. So there is a roll-up of price differences from raw material to semi-finished good to finished good.
Single level is what? Does not have a bomb, you're saying, or they will have?
Single level means with it will the price difference is for that finished good only. So multi-level means you are rolling up the price difference from raw material to semi-finished good to finished good. You can see roll up also.
Hmm.
The first step is always single level for that material, no roll up happens. Then we run multi-level, the roll up goes up and up.
So single level is like where we have PIRs. There is nothing to roll up. It's just as cost.
Yeah. So it is for raw material, PIR.
Mm.
Yeah, it will be for that only that raw material. But if the raw material is used in finished good or semi-finished good, the next step it will roll up, even those PIR also. So single level is it will remain in raw material. It always a two-step process by CKML CP. First,
Mm.
within one level of or specific material. But next, it is first is calculated variances for all the materials. May it could be raw material, semi-finished good, finished good separately. But here it does a roll up next step. So this is a roll up. Multi-level means roll up of price differences. It rolls up to raw material if it is used in semi-finished good or finished good. So it is an additional step, you can say, which is not possible in standard costing. Only when we do actual costing, this is possible. The major requirement for many for costing.
Okay.
Then we have concept called activity prices. So first, what happens is actual costs in FI, all the cost is booked to all cost centers like admin cost centers, service cost centers, then production cost center, utility cost center. Then
Mm.
the two things activity price either you can put manually in KP26 or you can calculate automatically in SAP itself. For example, what we should do is copy the last year's actual to calculate the price automatically. All the last year actuals as a planned data and then roll up all the cost through assessment distribution to production cost centers. And then we have actual activity, planned activity which confirm. So total cost divided by planned activity, we get the KP26 rates. So the two options manually calculate in Excel outside or automate
Mm.
activity prices. And these activity prices are always for production cost centers. Whenever activity confirmation is done, so this price is picked up. And this activity price is entered in the work center. It's always in combination of cost center, activity type combination. We calculate KP26 rates. And this combination is entered in work center.
Mm.
Production. So production cost center and activity type combination enter in work center. And then I don't know whether you reevaluate. We also reevaluate KP26 is a planned price, like standard price. Then we did a separate step to reevaluate activity price at actuals.
Okay.
And standard versus actual difference. Either we reevaluate the production order, but in HANA there's functionality. System will do itself. In CKML CP, it will post the variances to finished goods. Actual versus planned activity price difference. In ECC, you can reevaluate the production orders if you want. This itself is a big process, activity price.
Mm-hmm.
So during the month, we should know all the transaction happens. Then month end closing for production order is done, cost center is done. Then in CKMLCP, we first include the plants and material for which we want to do. And system will do first single level price determination.
Mm.
Once it does for all the materials, it will do multi-level roll-up. And the end it will do post closing. Either it will go to stock, will be revaluated in hand if it is sold cost of sales. So production variances, price differences, purchase price variances, cost center variances, exchange rate variances. These are posted either stock or both stock and cost of sales, depending on how much stock is there in hand and month end, how much is sold during the month. This entry is not reversed, but stock entry is reversed next
Mm.
month. In addition, when we finished CKMLCP, automatically in the background, we have to activate actual cost component split. So there was a standard cost component split. It fills up with the actual cost component split. This is automatic by the system. In CKMA3 itself, we can see both standard cost estimate split and actual, if we have activated actual cost component split.
In CKMLCP itself.
No, CKM3, sorry.
CKM3. Okay. Okay.
Both we can see, but it depends if you have configured accordingly. So we can in CKM3, we can see standard cost component split. And we can choose actual also. It will get actual cost component split. But in background, it is done by CKMLCP step.
Mm.
And these are the accounting entries when we do post closing. So before post closing, we can do multiple times these steps. Single
Mm.
level, price difference, multi level, but don't do post closing like bug day -6 onwards, start doing it. Start
Mm.
seeing CKM3 report any errors or reports. And this we do in work day 4. All the errors are resolved at this level.
Okay.
So these some of the T codes. When we activate plants, we have to use this CKM start, it will activate ML.
Mhm.
Then we have CKML CP, this month end closing, and CKM3 and actual cost analysis. This is a flow of transaction which happens during the month, and then month end we procure raw materials, actual price. We produced semi-finished good, finished goods. So here the price difference, if any standard versus actual, it in material ledger it will go and store there. If any production variances, when we do uh, production order confirmation, variances go and sit in the material ledger. And then we calculate if any overhead cost is there. Then cost center allocations we do. Production orders are closed. So these all are the steps before CKMLCP, different work days. Then work day 4 or 5, we calculate. POP, and then when you do post-closing step, system will reevaluate inventory and COGS. Then inventory adjustment reversed next month. This is a high-level process during the month and month end. They are more detailed also, but high-level process.
Mm.
Yeah, that's it for today.
No, this is very, very good. I've watched so many YouTube videos, right? Everything is, it doesn't get to understanding at this level. And this was what I have been looking for.
Great. I'll stop
I
the
mean,
recording or continue.
yes, yes.